where you're coming from, where you're located. It's always fun to see where people are from. Feel free to, make some comments, ask some questions. If you like what you're hearing, give me a little bit of likes. And I guess the biggest reward is to, throw me a review if you like what you've been reading, if you've been able to pick up a copy of Real Estate Note Investing. And I know today we're going to cover some stuff that's in chapter 5, right? And in chapter 5, it's actually called When Traditional Financing Dries Up. And, I think about how I got started raising capital, and it originated out of necessity, pretty much. A lot of times, it's hard for me today to think back to that time. I was actually out to breakfast with a good friend of mine today, Steve Lloyd, who's raised a ton of capital. And I raised quite a bit too over the last 25, 30 years. And, when I think back, I was just like everybody else, right? At one point, I had no money, had never done a deal, or I had money and never did a deal, even when I had money, or I had no money, or I was out of money and I was trying to do more deals and or trying to line up money for a deal. And I think what happened to me was, I had gone through the traditional methods of buying my first couple investment properties. And I don't remember if it was when I got up to 10 properties, something like that. I started to get a lot of difficulty in raising capital, and things started to get much tougher. So for me, the good news was, I joined my Real Estate Investor Association, and the good news there was I ran into a commercial mortgage broker, and I also ran into folks who were doing private money and hard money, and I also ran into self-directed IRA custodians and things like that. So these were game-changing things for me. And my buddy that I had breakfast with today, he actually has, he's raised a lot of money. I mean, serious money. And he has a couple tidbits that I think of when I think of him. One is, when you're first starting out trying to raise money, he always says, start with your phone, right? And I'm like, what do you mean start with your phone? But what he's getting at is the contacts in your phone. They're your first potential people that could help you out raising capital. And basically what he means by that is friends and family, right? So, great way to start out, right? So I know for me, that's great if your friends and family have some money. If they don't, then it gets much harder, right? But like you guys, if you're just joining us today, give me a little shout out, say hello, say where you're from, that type of thing. Like I said, we're talking about raising capital for notes in real estate. And, my buddy Steve, he always says, hey, start with the people you know, start with your friends and family. And I think that the other thing he always says is take your banker to lunch. And the reason he says that is because you want to know what a lender's looking for. And I'm going to cover that a little bit further today. And then the other thing that's neat that Steve always says is when people ask him what he does for a living, he'll say, I raise private capital. And I know for myself even, when I'm talking with investors, a lot of times I'll say, I raise private equity and what I do that for. So some great ideas on, things you can say when you're first starting out to get people, really intrigued by, hey, what is it exactly that you're doing? Why would they want to, invest with you, that type of thing. So, so you got to start somewhere, right? And a lot of times it is friends and family, because a lot of times people will say, well, how do you find these investors? How do you, how do you find people with high net worth folks, right? And I think, some people struggle with that. I know I did, because I came from a middle class background. I didn't have a lot of, I didn't have a large network. I didn't have a lot of wealthy friends or family, right? So it was tough in the beginning. And then later on, what I realized was it wasn't so much how many people I necessarily knew. It was more like who knew me, that type of thing. So, so I know when I first started raising money, it was really trying to find one investor for one deal, that type of thing. but you kind of have to know where some of the sources of capital can come from, right? So whether it's me trying to find the source of capital, whether it's a home equity line of credit on one of my rentals, or it's my retirement accounts or qualified plans, or even an insurance policy you can borrow out, right? Some people do that. I know a builder I work for used to do that, but it's really about me knowing how to do that, even with my own resources that I can even show others, right? So even if I'm looking towards other investors, I can show them ways that they can access money. A lot of people have sources of money they don't realize they have, like the equity in their properties, that type of thing that's not being utilized. Even if they didn't want to do it for themselves, they could do it for you, right? Which is a unique way to build your own bank, so to speak, out of the network of people that you know. I know for me, after I joined my local real estate investor association, I ended up starting my own group, which was called RING, Real Estate Investor Networking Group. And by starting my own group, I built my own network of investors, and we would do deals amongst ourselves, but it ends up being where it was a great source of capital for me for other ventures. And then people would also seek me out because they knew I would have a deal. So I know that's a big question for people too. It's why would somebody invest with me, right? Like, what would possess them to give me money or want to invest in me? And I think it really comes down to, how comfortable and confident they are with you or with your particular deal. Now, and the saying, if you have the deal, you'll find the money, that type of thing. But when you're new and you don't have a track record, it makes things a little more difficult. And there's some strategies I have. Actually, I talk about them in the book, Real Estate Note Investing, of some things you can do when you are brand new, you don't have a track record. You can, build a team with some other folks. You can do some neat things to try to circumvent some of those things that you're lacking in. I know one of the things I did when I was brand new was I was raising capital for someone else, right? For their project, and they had a big purpose of what they were doing. They were actually investing in commercial real estate to facilitate a Christian academy that they were building. So there's some neat strategies you can utilize. If you have a purpose bigger than you, it makes it easier to raise money, right? Especially for things like charity, right? But I know when you're starting out, it's kind of overwhelming. It's like, why would someone give you money? And it's really, how do you make the investors feel confident? And I think it's because you're demonstrating your team or that you have a good deal. And how do you know you have a good deal? So I know for me or some of the folks that I know that are newer, one of the easiest ways to know you have a good deal is to run your good deal by a hard money lender. And the reason I say that, whether you want to use the hard money lender's capital or not, you can get very educated from hard money lenders. Most of them are very experienced in the field. They know real estate inside and out. And I know locally to me, I'm just outside of Philadelphia. I remember going to my RIA group, and the gentleman owned a couple hundred properties, and he was a hard money lender at the meeting. But he had a ton of experience. He would actually look at my deal and tell me whether he would lend on that or not. And that's a big indicator, do I really have a deal? So I think when you're brand new, it's great to take a deal, run it by your hard money lender to see if it's a true, real deal. The other thing is, you can also, even if you don't have a deal yet, you can find out what their criteria was. I believe the hard money lender even required some type of a deposit or down payment, or there might have been an application fee, those types of things. Well, don't you want to know them in advance and build them into your plan, what you want to do with the property you found, that type of thing. So it's a good idea to get familiar with hard money. I know for me, I never did much hard money. I always thought it was too expensive, and I would try to use my own money all the time. But I think it also stunted my growth. And I think there are some advantages and disadvantages to using hard money or even private money. So for example, in hard money, one of the advantages is you can move quickly. They'll give you proof of funds for when you're trying to buy a property, all cash, and get a better deal. So there's an advantage there. Now, it can be expensive, But there's also ways, if you start to use hard money regularly and you can be profitable, well, you start to become more efficient. And the more hard money you use, you might actually get better deals or better terms from the hard money lender. And a good buddy of mine pointed out years ago, and I actually talk about it in the book, Real Estate Note Investing, about making money on the draw. And by that I mean, I never thought about making money on the draw. And a lot of times when a hard money lender, or even a bank in that case, if they gave you a construction loan, they'll have a draw schedule where as you complete different parts of the work on the project you're doing, they'll release capital. So they might go, hey, this first phase, when you're done the work, we'll come out and inspect it, we'll release $10,000 or whatever. And then when you're done phase 2 and we come out and inspect the work's completed, we release $20,000 or whatever that draw schedule is. Well, a buddy of mine pointed out to me one time, we were at lunch and he's telling me this story about how he had done like 39 deals and he's like, and he used all hard money. I'm like, why would you use hard money so much? And he goes, well, I was making money on the draw. And I go, oh. And I go, what do you mean by that? And he said, if the next phase was $10,000 and I completed that work for $6,000, I was able to put $4,000 into my pocket. And it's tax-free because it's a loan. And then when I go to use takeout financing or sell the property later, obviously he gets that money back or pays back off the hard money loan when he refinances, that type of thing. So great strategy to make money on the draw. So there are advantages to hard money that I think people don't realize. And you might be able to build your portfolio that much quicker. And you can use your own money for other types of deals like private lending to your buddies or something like that. And that's one of the things that took me a while to learn about. So there are a lot of advantages to hard money and private money. But back to finding these investors, it can be tough in the very beginning. I know a lot of people don't focus enough on their money list. They focus on their buyer's list. So how many times do you run into a wholesaler or a flipper? All they talk about is their buyer's list. Do you want me to add you to my buyer's list? To be quite frank, if you had a money list, you might not even need a buyer's list. You could fund all your own deals and keep all the properties, right? If you had enough money. So I think the money list is much more important than the buyer's list. But it just seems to go over their heads sometimes when they're brand new or they're just strictly wholesale. They don't realize if they had the capital lined up, they could actually do all the deals themselves or form a partnership with a big money partner and actually keep a lot of their deals. I know for me, the ideal situation was when I had bird dogs or wholesalers, that's what a wholesaler really is, feeding me deals. Basically, they were working for me, bringing me deals, and I was the bank. I mean, that was one of my ultimate situations. But it's really about making these investors feel comfortable and confident, like I was saying. But I think a real good business model or a real good deal, demonstrates that. And when you don't have a track record, maybe you can partner with someone else till you get one, or you can shadow someone else's deal, or you can demonstrate I'm doing deals just like so-and-so, they're in my investment group. You can find ways around some of that, I believe. I know when I'm looking to lend money to a particular individual, I do have pretty strict criteria and I'm not very lenient. Usually I only lend money to guys that have like over 100 properties or I've known them forever and I know where the properties are. So I do have a list of criteria that I use. One is I document my deals pretty detailed. I make sure I have all the bells and whistles. I would absolutely see an attorney in your state, especially if it's your first time around, first couple deals. Sometimes it makes sense to have the attorney on every deal. It's a small price to pay to put the paperwork together to protect yourself. There can be variations and things that you should have in there. Also, a lot of times you want to make sure that note, mortgage, deed in lieu, confession of judgment, where they're personally signing and things like that. You want to make sure you have all that stuff in place that's valid in your state. The other part, so there's some other criteria I look for too when I'm lending to somebody. It is, obviously I mentioned their experience level is important to me. I want to make sure they know what they're doing or they have some kind of experience in renovating property or they have a team in place that does. I want to make sure the value's right, what their numbers make sense, right? Is the current value and the after repaired value and their estimates of the work that you're trying to do make sense? Now, for me, that's fairly easy. I've been in I was literally in construction for 23 years. I'd been a realtor over 30 years. I know my market, I know the area, I know the values. So I'm very comfortable in that area. The other thing is, but say you're not, well then get an appraisal done, and usually the borrower pays for the appraisal. So not unheard of, right? Very common to do that. The other thing is you want to be named insured, right? So if I'm lending the money, I'm obviously going to be named insured. I did have a property burned down one time, and I got paid promptly. It was great. I was named insured, nothing to worry about. Didn't lose any sleep. And actually, my buddy made money on the property, so he did pretty well, even though the property had burnt down. So you want to also know the property. You might be taking it back someday, right? You might own it someday. So that's one of my criteria is I prefer to lend in areas where I wouldn't mind owning. That's one of my personal criteria. I'm not saying everybody has to agree with me. I know there's national, hard money lenders out there. More power to them. I get they have their own models and they know what they're doing. So for me, that makes a lot of sense. The what else? Title's probably the other one that I was missing. I didn't mention. You want to make sure you get a title report on any property that you're lending on, that type of thing. I think it makes a lot of sense. So hey Anthony, hey, glad you could make it today. Who else do we have? Tanita. I'm trying to see who else is joining us. It's good to see you guys on the call. Let me see. There we go. We're talking about today, if you're just joining us, raising capital for notes in real estate. It's actually covered in chapter 5 of my new book, Real Estate Note Investing, which can be found at BiggerPockets.com/note investing. If you're fortunate enough to go today, you can get 20% off if you use the code Live Note Investing. Live Note Investing gets you 20% off the book. There are also some bonus materials if you purchase through BiggerPockets, where Stay Safe. There's an ebook called Stay Safe, and there's a video with Brandon on how to go out and purchase a note and some of the due diligence. Me and my partner Bob walk Brandon through some things we look at. And there's also a great audio on asset mistakes investors make with attorney Mary Hart, who's a great asset protection attorney. So some great tips there that pretty much everybody can use. So some good stuff, real estate note investing, 20% off, BiggerPockets.com/note investing. And like I said, if you like the book and you've been reading it, feel free to give me a review. I love all the reviews. And if you like what you're hearing today, little thumbs up would be nice. Make some comments, ask some questions. We're talking about raising capital, which is one of my favorite subjects. It's probably like one of the only things I know how to do, right? It's the number one thing I'm good at is raising money. So it's something I definitely is passionate to me. And obviously we all need money for our deals, or, we're definitely in a finance-driven business, right? Whether it's real estate, whether it's notes, they're both asset-backed investments that require capital to get things done. I often tell people, no matter what business you're in, there's 3 pillars to every business, right? And it's capital, sources of product or sources of deals, and it's scalability or execution, right? And they're really the 3 pillars of any business. And whether it's a real estate business, a note business, and there's always one of them that we're trying to improve or develop. Or so, you might start out, well, hey, we have plenty of capital deployed. We need more deals. Oh, I have more deals. I need more people to work the deals, right? So, a lot of times when investors new, they're either trying to find a deal or they're trying to find the money. And what's funny is once they get going and they're moving along pretty good, the other question comes up. It's like, how many deals can you do in a month? How many deals could you do if the money was free? How many deals could you do if you had an unlimited supply of capital? How much capital could you deploy if you had unlimited deals? Right? You see where I'm going with that. So it becomes a scalability issue. Well, I remember when I was new, my goal was I want to do one, rehab, buy and hold deal a year, right? And then it became one a month, right? And then I remember a 2-month period, I did 16 deals. So you can, you see how that can grow. And I know I have friends that do 5 deals a month and 8 deals a month. And so it can grow and grow and grow. And then I even have my one friend has like 1,500 properties. So, you can, really grow and scale as time goes on. But, in the beginning, we're just like everybody else, right? You started out with one deal, one property, trying to get the money for the next deal, that type of thing. So that's what we're talking about today, raising capital for notes or real estate. And I know when I started in notes, it was a little different. I had already been raising money for real estate deals, and I'm going to talk a little bit more about that. But just to touch on the note piece, we started out with our own money. We only bought 4 notes, and we basically made sure the model worked. And then we went out and formed an LLC, and we got a little bit more money together, and we were tapping our sources of money, whether it was our home equity lines of credit or our bank accounts or our qualified plans like our IRA accounts. And then we started, once we knew our model worked and we knew what we were doing and we were making money, then we said, hey, let's go raise some private capital to go do it more. And then eventually we ended up with, private placements, and we were raising private equity. And of course, we are where we are today, a pretty sizable company. So, but it didn't start out that way, right? We started out just like everybody else. Like I said, 4 notes wasn't a lot of money back in the day at the time. So real estate wise, same thing. But there is one area I do want to talk about, and I do cover it in the book. And if you're just joining us, real estate note investing. And the one area in the book that I cover is about partnerships versus, I call it partnerships versus points, or, do you have a partner, or is it a partner or an investor in your deal, right? It's a good question, right? And what I mean by that is I do an actual case study on a deal that I did where I was going to do it with my cousin, and my cousin wanted to be my partner. And I've had partners over the years a couple times on real estate deals. I did a couple with my brother. I had 2 different brother-in-laws I had done deals with, and I had a construction buddy I did a deal with one time. And, they have their challenges, right? Even when it's family, sometimes that's even more challenging. But it's tough with partnerships. Are they always equal, or are they always fair? Are the roles and responsibilities well spelled out? That type of thing. So it becomes difficult sometimes. How do you do it? And a lot of times, I don't know. In the beginning, we're new. We were scared of the deal. We want to share the risk with someone else. That type of thing. But a lot of times, it's only the capital might only be worth points though. And in the book, I cover this deal with my cousin, where my cousin wanted to be my partner. I still love my cousin. And he's invested with me in a lot of things over the years. But this particular deal was a pretty solid deal. I found the deal. I was going to renovate it. And really, I just needed capital. And I settled on, no, I don't really want a partner. I'll pay you points. And in the book, I show an example of both scenarios of what would have happened with that deal. And it would have cost significant more money for me if he had been my partner, as opposed to him just lending me money. So in most cases, when you're a real estate investor, capital is worth points in most cases. Now, if you're doing a long-term relationship and you need a big money partner, and they're going to sign all the loans and they're going to give you all the money, and I'm not saying there's never a place for it, but a lot of times money can be acquired by just paying for the capital, and it doesn't necessarily have to eat up a big chunk of your deal, especially if they're not playing a big role in the project, that type of thing. So who else do we have on? We have Bill Powers from Long Island. All right, Bill. And a bunch of other folks. Tim from Florida. Now, it's really cool to see you guys on. Hopefully you're enjoying this stuff. Give me some thumbs up. If you have any questions, feel free to ask. Love to answer questions about raising capital. I know a lot of people struggle with it. I know I did too back in the day. In the very beginning, it was a tough thing for me too. I didn't have a lot of, didn't know how to raise money, right? I had no idea. And over the years, became better and better at it. Like I said in the beginning, sometimes I had to shadow a deal. I know one time when I was involved in, I was hired to help a company raise money, and we were doing, mobile home parks and storage centers, and I knew nothing about raising capital at that time. And, they gave me a lot of, they had no experience in the mobile home park space, which was funny. And yet they were, I think we raised $8 million, and we bought about $32 million in property. And the funny part was they had never done it before. But what they did was they assembled a team, and the team had a lot of credibility. So they had a team that had a lot of experience. they also had like a board of advisors that had a lot of experience in mobile home acquisitions, mobile home development, mobile home management, and they had a good team. So that's one way around it sometimes. So sometimes it's about how we portray the team we're putting together to do our real estate business or our note business, that type of thing. Even in the beginning, I remember when I was new to the note business, I always referenced one of my note sellers as they were guiding us and teaching us and showing us, because people were like, well, how do you know, especially for me at that time, we were raising capital for delinquent second mortgages, which is if you can raise capital for delinquent second mortgages, you're brilliant, because most people can't get their mind around that. So, but we would often reference, some of our New York sellers, that type of thing, and how we did the business. And we showed case studies. So you can do that too. You can show a case study of your real estate deal to your investors, get them excited about the deal. I know we used to do these Q&A sessions. Today we still do them. We do note buyer Q&As. In fact, we have one coming up on July 24th, 8 p.m. Eastern. If you go to pprnoteco.com, I think you can find it on there, where we still do note buyer Q&A calls. We go over people's note deals in detail, especially the NPNs, the non-performing notes, and we get down and dirty and we roll up our sleeves and we tell them how to exit those deals in the best ways and give them pointers. I usually have Bob on my calls, and so we still do that. But that's a great way to get investors involved, right? You can do a Q&A, whether it's a phone call, a webinar, conferencecall.com, whatever you do, or you can do it live. We used to do it we used to go have like a cocktail reception at a local tavern where we would have hors d'oeuvres and drinks, and we'd bring investors in, invite them, and then we'd demonstrate our deals. We used to do PowerPoints and show them our, various commercial real estate projects, or even a regular real estate investment deal. And a lot of times, even when I was one-on-one with an investor asking them a question, I would say, hey, do you know anybody interested in a deal like this? Let me show you this deal that I'm working on. I'm really asking that person, but I'm not coming out saying, hey, I'm asking you for money. I'm going, hey, do you know anybody that might be interested in a deal like this? And, really, I'm asking them, right? So don't tell anybody I said that, because some of those folks probably gave me money over the years. So, hey, Vanna, what's happening again? Oh, that website again is pprnoteco, NOTECO.com. And you can find our note buyer Q&A, question and answer session. I believe we have a guest this time. Bill Bromley is going to talk about commercial notes, note investing, and we're going to also, we usually have a lot of times we have a guest on for a little bit, 20, 30 minutes, and then we get into deal questions of people really doing real note deals, and then we open up to general questions, and that's typically the format of those calls. So if you can join us, next one's July 24th, 8 p.m. Eastern. Good thing to jump on. But today, we're talking about Chapter 5, Real Estate Note Investing, and we're covering raising capital for notes in real estate, which is one of my favorite topics. And it's one of the things notes help us do. If you think about it, notes help us paper the financing that goes into our real estate deals. And a lot of times we don't think about it, but real estate's a finance-driven business. There's just no way about it. No way around that. And I touched on a couple things, some tidbits to make things easier. I know I mentioned my buddy Steve. He always says, take a banker to lunch, find out what the lender wants to lend on. A lot of investors don't think about it. The investor thinks about what do they need, right? Oh, I need money. I need my deal. I need help. But what does a lender like to lend on? Isn't that kind of smart to do that in advance? It's a great strategy, right? That's what my buddy Steve means by taking a banker to lunch, right? Go find out what a lender likes to lend on. Go find out what makes them comfortable, what kind of deals they like. And it'll make your life a lot easier, right? So that's one good strategy. And he always had a good line on, what do you like to do for a living, or what do you do for a living? And I raise private money, right? That's always a great line too. And so they were just some quick tidbits. The other one is, sometimes raising money for charity helps you find investors too. And that was one of my secret ones, right? I didn't used to tell people that. Sometimes I'd go out and help fundraise for charity, and who else is raising money? Who else is there? People with money. So a lot of times people with money are involved in charities, and it's great, and they see you're doing good work, and next thing you know, they're, hey, what do you do in your regular job? Oh, I do real estate deals. There you go, right? So sometimes that's a great source of finding investors as well. But it's really, in the beginning, you got to try to build this trust, get a track record. And when you do have investors, how well, I see real estate guys do this all the time. They get a little bit of money and then they disappear, or they never communicate. Communication is key. So it's not even just raising the capital, it's what you do after that. First of all, do you do what you say you're going to do? That's number one. Number two, do you stay in communication? Even when things are going not so well, you should still stay in communication, right? So, and I know a lot of us have what I call a customer for life program. How do you stay in touch? How do you stay in communication? How do you, now it's harder as you get more and more investors and your group grows, it becomes a little more difficult, but you also have automation, you have technology, there's ways to do it, right? So think about how you stay in touch with your investor too. I think the other piece is when it comes back to making investors feel comfortable and confident, what are you doing about that? How transparent are you? I know we used to follow INREV guidelines, INREV, right? It's a great set of guidelines you can do. You can use some corporate governance. You can have some, audited financials. There's different things you can do to make your investment, especially as they get bigger and bigger, especially if you're doing, apartment complexes, things like that. The more transparency you have and the more information and corporate governance you can build into what you do, you're going to make investors feel a lot more confident. And there's another group called SBRE, Small Balance Real Estate, where they have a lot of resources if you're trying to raise significant capital, right? And to do it the right way, and some good guidelines there. So, and great stuff to think about, right? But in the very beginning, I was always trying to build my own network, which is a great idea. You want to have, the bigger your network, the easier it is to raise capital. But sometimes you outgrow that, right? You might go, well, I already hit all the people I know. And that happened to me as well. So one of the things I did was I started to tap into other people's networks. So I had, for example, I run a fund out of Dallas and I ran a fund out of San Diego, and I was tapping into someone else's group and their network and their credibility and their 30-year track record. So that's another way to do it. You can tap into someone else who already has a network. But the other side is to try to become a thought leader in your space, and then it becomes more about who knows you instead of who you know. And that's kind of what's happened to me. I mean, a lot of people know me or approach me to invest with me, and I didn't even reach out to them. So it kind of can flip over time. And the other thing is you want to be able to have some kind of screening process for your investors. Make sure it's a right fit for you. Make sure they understand the investment. Make sure they feel comfortable, because you want them to feel comfortable about it. You would want to feel comfortable, right, if you were investing in something. So there's some things you can do to make it, how can you earn their trust, earn their capital, that type of thing. And there's also different folks that are easier to work with, right? So not all investors are created equal. And just because people have money doesn't mean they're going to be a good investor for your investment. A lot of times you can look at how do people earn their money, or how do they make their money, or what's their knowledge base about your investment. Well, if I go to a real estate group, well, of course there's other investors there interested in real estate. If I go to some, some group my wife's in and they don't know anything about real estate, well, now that's a big learning curve. I got to go, oh yeah, you should invest in notes. Well, they have no idea what a note is. They might think it's a musical symbol or something, and I'm starting from scratch, right? So there's a learning curve to what you're doing. You want to make that as easy as possible if you can. So these are just some good ideas to think about so that you're not swimming upstream when you're trying to raise capital. So Kendall asks, you missed some of the presentation. Will there be a replay? The good news is this is usually on YouTube, so yes, you should be able to catch this. Let me see. Jack from Knoxville, Tennessee. Good to see you, Jack. Glad you could come on. Let me see, you guys. Let me see. Tim Eichland. I know Barb. John. So good to see you, Tim. Thanks for being on the call. Great to see you guys. This is a great venue to communicate with you guys. Feel free to leave a comment, ask a question, give me a little thumbs up. And like I said, if you really like what you're reading in Real Estate Note Investing, the ultimate compliment is a review. Gotta love the reviews. So, where was I? Oh, raising capital, right? So, a lot of good stuff when you think about it. Um, Asking people what do they do for a living, taking a banker to lunch, what do I look for in a deal, and how do you paper your deal? That's a good point. I did touch on paper in a deal. You also want to do due diligence, right? So whether you're investing in a deal, like I'm going to do due diligence, I might even do due diligence on the person. So this is something that I use. I use a company called Prescient, Prescient. And the reason I use Prescient is if I'm going to invest significant money, for example, into someone or some company, I do checks. I do background checks. I've been involved in some investments that went awry because I didn't do my due diligence. I didn't do some background checks. So anytime you're doing a partnership or getting involved or doing an investment, you want to know who they are. You want to know if they have any skeletons in their closet, so to speak. You don't want to be, one time I found out some guy I was looking to invest with had all these judgments against them, and it was a good thing. I realized, hey, no, that's not a good idea. I don't want to invest with that person. So the other thing is there's probably, besides my great book, there's some other books out there on raising capital. I know Pitch Anything by Aaron Claff's a good book. Another one is Matt Fairclough just came out with a book on raising private capital. I read Matt's book, great book. He's on BiggerPockets in the store as well, BiggerPockets.com. If you're not going to /note investing, you can check out Matt's book, but he's a good buddy of mine. So there's a lot of, there's plenty of good resources out there to learn how to raise capital, do it right. Make sure you have an attorney, make sure you get the title company involved if you're doing it. Make it look professional. It's going to go a long way in your ability to raise capital. And do the right thing, get the right paperwork. And here's why you want the right paperwork. Say I don't know, I'm raising money from you and I do I'm not going to bother doing a note mortgage. Or I'm only going to I'm not going to do the mortgage, I'm just going to do a note. Or I'm not going to do, I'm going to shortchange the paperwork. And then, okay, it's Friday night and you're sitting at the bar and the attorney next to you is going, you did what? You did a deal and did you do this? Did you get this? And you go, oh no, I didn't get that. Well, what are you going to think? You're going to think, oh my gosh, I just been bamboozled, right? So you want to do the right thing. You want to treat people the way you'd want to be treated. You want to protect the investor and you want to treat their money like it's your money, right? And you'll have plenty of money for years and years to come. And especially with retirement, you're dealing with people's hard-earned money. You want to take care of it. It's the right thing to do. It is. So just be honest with people. Do the right thing. Do what you say you're going to do. Protect their capital. Do the right paperwork. Record the mortgage. Every now and then I'll hear a horror story. There was a local person that ended up in jail. They didn't record the mortgage and they should have, and they were borrowing money from two investors for the same property. You don't want to be messing with any of that nonsense. You want to make sure you do it the right way if you're going to do it. The other place people get money from sometimes is angel investors or family offices. Not that that's pretty advanced stuff. The one thing with them, though, is a lot of times they want control of your deals or your book of business, that type of thing. So it's something to keep in mind. I found out, raising private equity of my own was a much better way where I'm actually pulling money to go do deals, whether that's buying pools of mortgages or pools of houses like REOs, real estate owned from the bank. So, once you move up the chain, you can actually do bigger and bigger deals the more and more capital you raise. Raising private capital can be a very rewarding skill set to learn and very great knowledge to have because you're really going to be able to, significantly build wealth over time by using other people's capital to help you do that. So hopefully you guys liked what you're hearing today. Not sure if I can see some questions here. Somebody's asking, where can I buy first position notes? Hey, there's a lot of places to buy notes. There's note brokers, there's websites, there's Loan MLS, there's exchanges, note exchanges like FCI Exchange is a great place to go buy first mortgages. You can buy them from funds, funds like mine. There's plenty of other funds out there that sell notes. There's no brokers. The list goes on. NILEX, all kinds of exchanges. I think you're just probably not familiar, Ray, but there's plenty of places to buy notes. Who else do we have? Let me see. Edwin from Jersey. What's up, Edwin? Who else do we got? So, a lot of great stuff today. Hopefully, you guys enjoyed it. I know if you go to BiggerPockets.com/note investing, you can pick up the book if you haven't. There is a discount code, 20% off if you use it from today's live call. It's the code is Live Note Investing. Live Note Investing gets you 20% off the book. If you like it, leave me a review. Appreciate it, love it. Also, like I mentioned earlier on the call, we do have a note investing Q&A call that we have on July 24th at 8 p.m. If you go to pprnoteco.com, you can find out about our next call. It's at 8 p.m. Eastern. I believe it's a Tuesday night. And our next BiggerPockets Live is on July 18th. My topic will be sourcing notes and real estate deals. So I believe it was Ray that was just asking, where do I get notes? We're actually going to cover that in detail on the next call, which would be next Wednesday at 6 p.m. Eastern, 4 p.m. Mountain, whatever. I don't know where you guys are from. You guys are from all over. So, hey, it was great chatting with you guys today. Thanks for being on the call. Hopefully you picked something up from this. You enjoyed it. Feel free to leave a comment. I will answer them even if you leave it later. So I'll try to jump back on and answer any questions you guys have. Or, like I said, jump on our Q&A call on July 24th at 8 p.m. Eastern. Otherwise, hope to see you guys next week. And thanks a lot for being on the call today, guys. Real estate note investing. BiggerPockets.com. All right.